How's it going, everyone? This is Chris Talks Crypto, part of the trading course that we have here. Today, we're going to talk about trading psychology and its impact on performance. So we got a couple people here. We have myself, Nosa, and we got Big Trav as well. Everyone here experienced traders, and really what I want to do today is get some perspective, not just from myself, but from some other people too, to see what their experiences have been over the years and kind of the impact that psychology has had on their P&L. So let me move this out the way because I'm like, yeah, there we go. All right, so if y'all, I guess I'll introduce myself, but yeah, this is basically going to be a conversation between the three of us, and we're going to touch on a couple different points that we've outlined before. But as I said earlier, my name's Chris. This is Chris Talks Crypto. My background formally is chemical engineering, so I've worked in the oil and gas industry for the last about 7 years or so. And I have been trading since 2019, so maybe like Q2 2019. And yeah, y'all want to go ahead and introduce yourselves?
Yeah, I'll go. Yeah, I'm Big Trav, so I'm pretty much in the same boat. So background initially in IT, in data analysis, and then after working about a year or so in the corporate world, I realized like, okay, this isn't how I'm going to afford the Lambo and do the things that I want to do in life. So ended up getting into trading in 2019, and yeah, just started doing it every day for the last 5 years. So that's kind of the biggest thing now. Started in Forex. And then now I went just strictly into crypto now and just do crypto 100% of the time. So that's me.
Yep, and my name is Nosa. Similar background to Chris and Trav as well. Started in biotech, switched over to just tech, engineering, technology, more IT. Um, and then she transitioned to full-time trading recently and trading and entertainment, running some of my own entertainment business. But started in 2019 as well, started with options trading and then transitioned more into crypto. And then recently in the past 12 months, the futures market. So
Yeah, pretty solid. So yeah, and I'm kind of in the same boat too. I didn't mention, but like I started in Forex and then transitioned to indexes. I really haven't done too much with stocks actually, but they all really kind of trade the same. And then crypto more recently as well as futures. So between the three of us, we've kind of seen the majority of the markets that people trade one way or another. And we have our own experiences there. So we'll kind of touch on that as we go through. But I just thought it was kind of interesting. Like, I've known Trav for about a year and a half, somewhere in there. And then Nosa, I've known him forever at this point. So it's like seven years at this point before either of us started trading. But I just thought it was interesting that that all three of us started at the same time. So I just kind of wanted to get a conversation to see like what have the last 5 years looked like. So big thing here, trading is a mental game. It's you versus you. It's not you versus the market. Your ability to make money on a consistent basis as a trader rests entirely on your ability to remain disciplined in all market conditions. So up, down, left, sideways, upside down, whatever it might be. You got to be the guy guy or girl who remains consistent. That's what we're looking for at the end of the day.
Yeah.
So the market doesn't know who you are or care who you are. It's not against you. It's like this is what is this from Endgame? They were about to fight Thanos, and she's like, "You took everything from me." It's like I don't even know who you are, and that's really what it is. Like the market like doesn't know who you are. It's not against you. It's something that moves consistently all hours of the day, pretty much. But it's you being disciplined and being able to ride those waves as it goes. But you had some, Trav?
Yeah, I was gonna say that's the biggest thing is going into the market, like it's a battle almost, and it's you versus you. The market has no care in the world that your bills are due or that this is coming up or that you need this for this. That's the biggest thing and you end up psyching yourself out at that point and not listen to your rules or your foundation. So
Yeah. Yeah, it's absolutely one of those things where it's like every single day that you wake up, you make your analysis and you have your trading plan, whatever one or two strategies that you have consistently, and it's like your job is to execute it, regardless of what it is. And sometimes you figure out, hey, there's nothing to execute right now, and that's a good trade too. But you have that decision to make. Am I going up? Am I going down? Do I think the market's going to go sideways, or do I just want to stay out for the time being? So taking a look here at some of the different psychological mistakes that traders make. So you have impatience, lack of discipline, adding to losing trades, revenge trading, over trading, having unrealistic expectations about what the market could give them or what it could take away. Emotional trading, so fear and greed. We see that a lot on the fear and greed index, and FOMO, the big one, fear of missing out. Like you see something, everyone's making money, so you have to get into it, but you don't realize that we're at the top and it's all about to go down. So what have y'all's like? I guess like some of the maybe one or two big ones that stick out to y'all. I'll give mine as well. So
Me is revenge trading and over trading. Because I think for me, it's like even if I have a losing trade, sometimes I had to. They all kind of go into each other too, because it's a discipline aspect of losing and it's a patience aspect of losing. And for me, it's like I had to learn that even if I lose $600, sometimes I have to remind myself, like, hey, I'm better off closing the computer right here for the day and going away because I know that feeling of what it's like to lose more than $600. And because I'm like, I'm gonna revenge trade and try to over trade and make all that money back in one trade when in reality, you don't have to make it back in one trade. You can come back the next day and chip away at it, or you possibly could make it back in one trade. But if you're forcing your hand and trying to revenge trade, over trading it, I've that's where I've like blown the most of my accounts in any kind of trading and options in futures, no matter what it is. So yeah, like that's growth is just being able to say like, hey, I'm down 600. That's a blessing in disguise. You can be down way more if you know trading.
Yeah, no, that's true. I definitely agree. Definitely the biggest. I mean, they all, of course, tie back into discipline, but I would say my biggest one is over trading. So I think throughout my 5 years now, going on 6 years of trading, the majority of the time, it wasn't that I didn't know how to trade or I didn't see the setup. I just would over trade. So, but okay, cool. I know that this move in forex or whatever, right? Technical analysis. Okay, I'm waiting on this couple confirmations. And then as you're waiting for that, you're like, okay, it's going to go down. I'm waiting on the buy, but as it's going down for a quick sale, maybe I get the sale before it gets ready to go into my buy. So then, of course, that's when the revenge trading and over trading comes into play. But I would say definitely over trading. I blew a lot of accounts or wasted a lot of money when I didn't need to trade. And I knew how to trade. I just, like you said, just ended up psyching yourself out at that point. But definitely over trading is probably my biggest issue. And once I got over trading, only taking 2 to 3 trades a day. Um, and at this point, I'm kind of like 2 to 3 trades a week now. But yeah, if you're taking more than 2 to 3 setups a day, then you're doing way too much over trading, I would say.
Yeah,
yeah,
the best is well, the best days sometimes are when you don't have to trade for sure. Like you're just like as you save yourself the emotional and the mental like capacity. And then also I've learned also like the more you trade, every time you press like when you first enter a trade, I wouldn't even say 50-50, but let's say it is 50-50 ideally. It's a percentage of you are going to win or you're going to lose. The more you enter a trade, you're decreasing your percentage of likelihood of winning. You're increasing the percentage that you're going to lose. And also, you're also the more you trade, the more commissions and fees, which I that's the biggest thing I had to learn as well. The more commissions and fees you're giving back to the market or to these brokers, whoever it may be. So sometimes you might end up making like $100 and getting back to your break even. But if you go to your net P&L, you're like, dang, I just spent $200 in commissions and fees because I just traded way too much. So you're in reality, you're still down like negative 200. So like, yeah, over trading is like a disaster for, they want you to overtrade. The brokers want you to overtrade. Um, the, you know, the market would gladly want you to overtrade, take your money, but, uh, it's a matter of like the less is more in this case, which is kind of, contradicting or like, but yeah.
I think that brings up a good point too on the aspect of fees and slippage too is something you have to look out for. So it's like the fees, like okay, yeah, every transaction that you make, there's a toll that you have to pay. It's a transaction cost, and it may be a flat rate, it may be a percentage of the trade basis, depending on what broker that you're using, but you have to account that into your calculations. You have to account the slippage. Like, okay, well, here's where I wanted to get in, but here's where I actually got it, and like I might have lost that much in P and L and all the things of that nature. So, uh, there are other considerations, or did I win or did I lose or did I break even? And when I broke even, did I actually break even, or did I take like a $10 loss? Even though that's not much, that does add up over time. I know for me, out of all of these, the one that sticks out is the having the unrealistic expectations. And I ended up it pushed me to making my own indicator, kind of just like to be able to see like what are the bounds, like how far could this thing go in any given day and whatnot when I'm day trading. But because realistically, if you look at any price chart and you kind of measure what's the average candle size over the last X amount of candles, there is a range. Like there's a range of how far something could go in a day, but you know, without that understanding and without that, it kind of forces you to like, oh well, I could go this far. Well, that's saying that that's way out of bounds. So it's like that may not even be realistic for you to kind of target at that point. So something that I had to learn over the years.
Yeah, yeah, that's true. That you and also too, it's based off of your skill. I think that's the biggest thing is when we look at those expectations, well, where's your skill set, right? Like we all want to, when we start trading, you're like, okay, this first goal is like, okay, I want $1,000 a day. Once I have $1,000 a day, that's the goal, or $100 a day or whatever you start with. It's like, well, you're not at that level yet, or your account size is not at that level either. Like you're expecting to make $1,000 a day with a $200 account. And so those, like you said, those expectations over the long haul are not realistic. Like if you're expecting to make these, crazy gains every single month, that's not what it is. You have to take into account, kind of seasons, of course, the psychology of the overall market, where we are, whether it's election, things like that. Those play a big part into those expectations. Like I said, knowing where you are. So.
Yeah, yeah, very much so. Um, yeah, I think I kind of touched on those, so I think it's pretty good. We can come back to these later if need be, but this is the big one. I know a lot of people have seen this chart, but it is the psychology of Wall Street. It's a Wall Street cheat sheet that they call it. But really, it does a good job of looking at the market and seeing like how it moves in waves, pretty much, to where you have the price, and then price runs up, and eventually it hits some peak, just like here. But once it hits the peak, again, this is euphoria. Everyone's so excited. Everyone wants to see. Everyone's making money. We're all geniuses. We're all going to be rich. All going to make it. We're at the peak. This is when everyone cares. That is your point of maximum financial risk. So you have to be wary of your emotions. It's like, okay, I'm excited. Yes, we have made money, but let's be realistic here. Like when are we actually getting out versus what happens next? It starts to come down very, very quickly, because the enthusiasm, that bubble starts to pop, and then you get down to the trough. But the trough is the point of maximum financial opportunity, right? So it's a great opportunity now. But we're down at the bottom. Everyone has gone through all these negative emotions, so they don't even want to buy at this point. No one wants to buy after everything has gone down, even though that's the point where everything is the best. And no one wants to sell at this point, even though it's the top of the market and it's the best way to sell at this point. So it's kind of crazy how everything in the market is almost opposite of what you would think to do. It's really opposite of what the overall crowd is doing and whatnot. So you have to kind of have that it's almost opposite day pretty much. You have to do in reverse of what everyone else does. So what are y'all's thoughts on this?
Yeah, I think you hit it on the head. Um, a part of like just trading is definitely grounding yourself because you're definitely gonna go through these emotions when the market cycle happens. Everybody, especially when you first hit your first big win, you're definitely gonna have that I'm a genius and like I'm gonna be rich. And then you're also it's gonna like want you to come back for more. Like the parallels between trading and gambling is like crazy because that's when you're gonna, think that you can, spin this or double it, whatever it may be. And it's gonna lead you right down that path of like the anxiety and the denial, like all these different like emotions that are gonna come in. So for me, it's just a matter of what eliminates this is like knowing when and like where like what like you kind of said like the range of like what am I targeting, is this realistic, and like what data is behind this to back it up. So I'm not just gonna sometimes you do catch a big move that goes all the way to the top, like, and it might just be like a day where the market goes crazy. It's like, okay, like I know that is not typical. That's out of like the bounds of what usually should happen. Like I got lucky. I've learned to say like, hey, I got lucky. That was not my skill. So it's like just whenever you're doing your analysis or learning to trade, just like actually learning like what's realistic and like what can my skill will what will allow me to like do at this point in time. So that's kind of keeps me grounded and like without having to go through like all these emotions as the market fluctuates.
Yeah, that's true. And be able to take your wins, right? Where it's like, okay, cool. We know that 90% or whatever the statistic is that majority of the traders lose money or fail. It's like, okay, cool. If I'm part of that small percentage that made money today, I just need to take that win and keep it pushing, like that 10% once it's compounded, that 10% can be a huge game changer. And like you said, knowing where you're at, definitely looking at those different confluences, being able to look at the market charts, things like that. Like you can't be in a the top of a bull run and think like, okay, we're about to keep going up, and it's like, well, we haven't went down at all. You know what I'm saying? Like there has to be something. We've been straight bullish for 6 months, right? Like at some point, there's going to be some selling that comes off, right? So like you said, you have to be able to take those expectations and understand where you are and take the money before it's too late. Those margins are very thin.
Something I heard that was very interesting over the past few months on Twitter was that like somebody tweeted since they were like you are willing to go to work from 9 to 5 every day for like $50 an hour and then you're willing to also wait for another like 2 weeks for that check to come to you, it's basically to like for you to get paid. So it's like if you have $500 in your account and you make that in 30 minutes, like why won't you take the money off the table? Why are you trying to, you're patient enough to wait for 2 weeks for a paycheck and go to work every day. Why aren't you taking $500 off the table when you made that just like in not even half the time? You made that like in like tiny comparison of what you would have to do to like make that for a 4 days worth of work. So I think of it that way. To like, so that's a good point, Trav. Is like definitely taking your money off the table instead of thinking like, oh, this can keep on going. Like this could go to the moon. So
There's like a certain point, like there are buyers and there are sellers. And there's a point where everyone has become a buyer. And then once everyone's a buyer, there's nothing left for it to hold up. And then like there's a point where at the bottom of the bear market, everyone has become a seller and there's no one left to sell. So it's like you're trying to, on the way, you're trying to find a buy at at the bottom of the bear market where there's no one left to sell. And then you're trying to find a sell somewhere at the top where it's like, hey, party, hey, this is about as lit as the party's gonna get. And then everything reverses and like everyone's it's you gotta leave the club at a certain point, essentially. Like you gotta know when to get out the club.
When you said party, it reminds me of like parents telling you to be at the right place in the right time, like when to leave like the party early. So that's
Yeah.
funny.
Yeah, that is true. That, and like you said, you definitely have to respect the dollar, right? Like if your time is right now worth $50 an hour right now and you've made $150 an hour, it's like, why wouldn't you take that? Like every other day you would, right? You wouldn't go to work and then be like, no, don't just keep my paycheck. I don't want it. It's like you made the money, take it. Like, why not take it out? Like,
Yeah.
and that's kind of how I look at it. Like, of course you compare it to where you are in life, but it's like, okay, if I'm making X amount, if I've already made multiples of that X amount right now, why would I not be up today? Like I look at it like, okay, like a cheetah, right? Yeah, a cheetah is the fastest, but it's like I don't need to run the fastest if I don't need to, right? Like I'm not gonna use all my energy just because I can. Like it's the same thing with the money, right? Where it's like, okay, I have the money in my account, but I'm not gonna keep over trading just because I have 10,000 in the account. Like, no, leave a little bit for the next day. Like you can't run the marathon if you're stuck on that 1 mile. Like it's about the long haul. So
Well, I think all that leads down to consistency, right? So it's like, okay, if I have a $10,000 account, am I capable of easily making $500 or 1,000 a day? Yes, probably. So it's like you understand at my $10,000 level, that's how much I can make, and at my $50,000, maybe that's 2,500 a day, or maybe once I get to 100K, I can make 10,000. I don't know how much, but like you get what I'm saying, pretty much. But it's like you scale up as time goes by. See what we got on the next one. I think that was a good segue into the. I don't know. Have y'all read Trading in the Zone?
Yeah, I have.
yeah.
Yeah, it's pretty much the Bible for any trader who's like starting out on the journey. It's like it's the I'll say the best books that I've read as a trader have had nothing to do with what's going on the chart. Nothing that has to do with like the candlesticks or anything like that. And there's tons of books out there with the candlesticks, but there's very few that actually talk about like what's going on inside your head, pretty much as the market is moving and as these candles are moving. So if you had to kind of sum trading in the zone up, like Mark Douglas had a couple. He had two things. So he had the five fundamental truths of trading and the 7 principles of consistency. We're going to look through both of them, but we'll start here. So number one, first truth: anything can happen. Second truth: you don't need to know what's going to happen next to make money. Third truth: there's a random distribution between wins and losses for any given set of variables that define an edge. Fourth truth: an edge is nothing more than an indication of a higher probability of one thing happening over another. Fifth truth: every moment in the market is unique. I know at a certain point in my trading journey, I used to say this like the Pledge of Allegiance every morning, pretty much. Like I would wake up and say this one and the 7. But what are y'all's thoughts on these?
I think
Sorry, I was on mute. Yeah, that I feel the same way. So definitely when it comes to trading, or just growth in trading, the biggest is definitely internal. Has nothing to do with the technicals. Majority of the time is definitely, I would say trading is 95% mental, and then the other 5% is that technicals and fundamentals. But if you're out of whack for yourself, then you will never, even if you know the edge, right? If you have that discipline, or I mean, if you have those trading plans, but you're not disciplined enough to follow up in those lines, then it's never going to work, right? And you have to have your mental together with that. It's just like a extreme sport, like one of those, like a professional, right? Like you're not gonna get ready for the World Series or whatever and be worried about some drama or something like that. You have to mentally be prepared, and it's almost like boxing. Like it's a very mental game, in the market, right? And like you said, sometimes you get lucky, but anything can happen. You have to be ready for both sides. But the only thing that's predetermined is your risk, and I think that's what people fail to kind of focus on is, um, like you said, there's so much probability. And if you're not working on yourself, continue to work on yourself, to help with that edge, then trading is going to be a very, very hard game because it's literally you versus you, nobody else. So,
that's a bar. Only thing predetermined is your risk. That's a bar.
Yeah.
Yeah, 'cause every one of these points are true. Like anything can happen. I see traders that will say like the market should go here instead of like it could. Like it's just like using your language, especially when you're learning or like whoever you're watching from, because you're saying it should, but the market doesn't like listen to you. Like it doesn't listen to me. It doesn't listen to anybody. It can go there, but we don't know it can go there. And then like the second point, you don't need to know what's going to happen next to make money. That's very true. I've been in trading rooms where I'm going short, somebody else is going long, and we both make money like at the end of the day. So it's like all these points have truths to them, and like when you like kind of the more experience you get, the more you realize like exactly what Mark Douglas was trying to get across, and you can then implement it into your system. So yeah.
Yeah. And I would say too here is like we talk about probability a lot, and you mentioned the language that's used. So um, the saying, I know we talk in the Discord all the time, but like the language that we use, like, oh, this could go here, this may go here. There's potential. It is likely that something has, like that type of probabilistic language, and it's not. I get kind of skeptical when someone is overly confident in one direction, like unless there's just an overwhelming amount of evidence, pointing that they're right. But when it comes to stuff like day trading, where it's so volatile and it can change in seconds, for someone to say that they know it tends to lead me in a more skeptical direction. It's like you may have a 60-40% chance of winning. You say like, okay, well, I think there's a 60% chance that we're going to go long and that's going to be right. Okay, cool. So you go long and maybe you lose. That doesn't even necessarily mean that you're wrong. It just means that you were exposed to that 40%, that you could lose, like, pretty much. So that's still on track as long as you follow your plan for what it is, like, consistently.
And that's crazy because I think for beginner traders or people that are just coming into the game, it's the opposite. They're going to be skeptical if you're not using the surefire words of it's going to go here or it should go here. When they
Mm.
hear you say it could or it may, they start losing confidence when you like, why don't you know where it's
Oh
going?
yeah,
Or
he doesn't know what he's talking about.
yeah, when that should not be that should in fact not be like what you're saying. I shouldn't be telling somebody like, oh yeah, this is gonna like I think it was the GameStop rally and a friend texts me, I'm like, it could go here. I don't know. Like it might come down again. So like like it's trading is odd. You have to literally switch your psychology from everything. And I think he talked about Mark Douglas talked about this in the book. Everything that you learn like in society, like the normal way of thinking, you kind of have to flip it. Especially like because as humans, the older we get, we kind of learn to follow things based off of past behaviors and patterns. Like like you touch a fire when you're a little kid, you're gonna notice not to touch the fire again because you were burned and you were hurt by it. It was hot. So like as a human, as an adult, you start to like your perspective changes so much because you have so much knowledge from like all these different experiences you had in the past. And with trading, it's like you kind of throw that out the window and you rely strictly on data and a system and like say that anything can happen. So when I'm entering this trade, like Trav said, all I know that's predetermined, I don't know like what I it's like I don't know what's gonna happen. Anything can happen. There's no past experiences here that I can maybe rely on and say this might happen. I've seen this happen in the past. Last election season, we had a crazy night, but it's like you don't know what can happen in this election season. Like the only thing that's for sure going to happen is my risk. I have a stop loss here. I can lose this amount of money. I can make this amount of money. That's for sure. So
Yeah, no, good point. And like I said, I think it's definitely when it comes to trading, it's definitely a 180 for every way or everything you were taught, right? When it comes to the cycle of money in general, you realize that you don't know half the stuff that you think you know about money when it comes into trading. And that ego, you have to be able to suppress your ego. Because like you said, at the end of the day, it's about making money. It's not about being right. And that's where a lot of traders get caught up of like, hey, I called this, or I called the top, or I called this. And it's like, are you making money or not? Like,
yeah,
we're not here to be fortune tellers. We're here to make money. That's literally it. And I think too, the other part with new traders is just the fact of we're so used to society where the more that I work, the more I get paid, right? Well, in trading, it's not like that. It's like, okay, the more I trade, the more I'll make. That's not how it is. The more you trade, you're probably going to lose. That's usually how it is. The less you trade, the more money you make, usually in trading, because you're like you say, you're going to overtrade, you're going to get too cocky, you'll get one or two good trades, and then you'll over leverage. So that's where discipline comes in. But I think the biggest thing is that I think should be on here, and that Mark Douglas talks about, of course, is the discipline, but also internally just having that trading plan. Like you have to have some type of format to go off of, or you'll never get better. You know what I'm saying? Like if you know, okay, if I'm working out and I know that every day I come in here and I start with 145 on the plate, I'm not going to go in there and start at 245s and I'm not ready for that yet. You know what I'm saying? Like your account can't handle that. You're over leveraging. It's kind of the same principle of just like you said, looking internal, or you won't you won't succeed in this market.
I think that's a really good point that you just made on the point of making the gym analogy. Because the thing is, like, regardless of, you have to mentally be able to lift, two plates on both sides, and it's not like just because my account is $10,000 or $100,000. Because if you're a new trader and someone, you're starting, maybe you got some type of windfall, and you're starting with $50,000, you're still trading, like your money mindset is so off that it's like, you're stuck at this level. But over time you put your reps in and whatnot, and like you get up to like, okay, well, I can confidently trade $50,000 because I'm used to what comes in and out of this account because of it. And that does take time. Like it's not the person who has the biggest account, because you can just easily, you can get 100K account, your own money, not a prop firm account, and blow all of that if you're a new trader and you don't know what you're doing. And you can blow it in a day too. Not weeks, months. Like if you click the wrong buttons and you don't know what you're doing, you can harm yourself. And that's why it is important to start small. So
somebody made $2 million trading Tesla options in COVID, and he lost all of it after the bull run.
yeah, I think you put that in the group. I was like, this is crazy. You can round trip it. I mean, you see it in crypto all the time. Like people be up $400,000. Like, yeah, man, I round tripped it all the way back to
Crazy.
2000. What?
You
Like
make
400,000
20,000
for,
a year.
yeah.
Why would you not take that? And that's how I look at it. Is just, I mean, what is your time worth, right? And that's how you have to look at it. You have to be permissive of where you are, right? Of in life, and like you said, the account balance and everything else. Like if you're not at that $1,000 a day and you make $1,000 a day, you don't take it. Okay, so you're gonna give it back at some point. The market gonna take it back. You got lucky, so
Well, you said time too. So it's like, okay, well, how much time have I actually bought for myself? So if I'm making $75,000 a year, and somehow by the grace of God, I get up to be 750,000 in my account, you just effectively bought 10 years of life, like
That's what I'm saying.
without having to do, I mean, not saying without having to do anything, but it's like you have to value your time and see what that's worth. Like, what is 10 years of life worth to you? And I know everyone has other obligations and dreams and stuff, but you know.
Even on a daily basis, it's like some days I'll be crying like, "Oh God, please, I don't want to trade anymore. I want to get off the charts." But you're sitting there trying to trade because you're trying to revenge trade and make your money back all in one day. You just sat from market open to market close, bro. You just worked a 9 to 5 basically. You did. Well, it's a 7:30, probably be waking up 7:30 doing a market analysis. You work 7:30 to 3:30. You just work the whole like 8 hour shift because you sat at the charts all day. And that's happened before. It's like if I make money, I'm taking it off the table and I know that I'm gonna get my day started. My day doesn't get started until I'm done trading to me. Like that's two separate things. Like that's like my trading is like separate from like my actual day of me enjoying like going to the gym or like going to, spend time with friends, whatever it may be. I don't have my meetings for the day mostly scheduled for like after like 12 because I like to be out the market by like 11 a.m. for the most part and like go enjoy the rest of my day. Like if you are gonna sit at the computer from at your screen from like market close to market open and close, you don't value your time. You just traded one job for another job basically.
Or
So
probably doing both at the same
Yeah.
time, realistically.
Yeah. Right.
So
And
it is one of those things. It's like, what are you trading for? Like, I'm trading so I can take my money and get my time back. I just kind of talked about like, okay, you could have bought 10 years of your time. People trade because like they want to utilize the capital that they have to make more capital, use that capital to fund the life that they need. Like I think there is this misconception that all traders just kind of sit in front of a computer all day and look at charts. We kind of do in one way or another, but we might not be actively trading the entire time. So um,
no, that's true. Yeah, definitely. If you're sitting at the desk more than 3, 4 hours, what was the point? You could have just worked 9 to 5 then, right?
uh,
Like, and so yeah, that's a good point.
yeah, I mean, honestly, most of my orders are set by about 7:30 or 8, somewhere between like, probably right before 8:30 because I want to be in before the markets open. Then it's just like at that point you're watching it happen. So let's go over these real quick. 7 principles of consistency following up from the Five Fundamental Truths. This is also by Mark Douglas in Trading in the Zone. The first one, I objectively identify my edges. So I know what I'm talking, I know what I'm looking for. I predefine the risk of every trade, kind of like what Trav was talking about. Um, you know how much you're gonna lose. 3, I completely accept the risk or I'm willing to let go of the trade. Like if you're too nervous, go ahead and get out. 4, I act on my edges without reservation or hesitation, meaning that you see it and you shoot. 5, I pay myself as the market makes money available to me. Again, you may be up $500. You only make on average 150 a day. So go ahead and get your $500. Um, 6, I continuously monitor my susceptibility for making errors. That means you have to know yourself. Like what are the common errors that I make, and what are the the consistent mistakes that I make, and how do I correct them? And then 7 kind of wraps it all up. I understand the absolute necessity of these principles of consistent success, and therefore I never violate. You have to remain consistent, one way or another. So
I think like these are great, man. Like I said, when you learn how to trade properly, these are all embedded in like a great trading plan. So for example, I completely number 3 and 4. Like I learned that if you're not following the rules of number 3 and 4, if you're having any hesitation, if you're not accepting the risk that you put on when you put the trade on, that means that if and you have any kind of anxiety, that means you're over leveraged, bro. Go trade smaller. Like when I was having anxiety about like, this is like it might go this way, it might go that way. Even if I had a stop loss set, like that was like still like a small stop loss, if I was still nervous that I was gonna hit that stop loss, I'm over leveraged. Like if I don't want to lose that amount of money, like I'm trading too much. Like, and then like 5, when I started learning how to trade correctly, I started learning how to scale out of positions. Like, taking money off the table doesn't mean you're necessarily like closing out the full trade. It's like, oh, I didn't know that as you trade, there's certain benchmarks, certain levels in the market that you should be taking off amount of contracts. Maybe you have 3 contracts. At this level, you take off 1 contract. So you're practically break even, like if the trade goes back against you, you're not going to lose any money. Then this level, you take off another contract, and by the third level, you're just leaving on a runner, as they say. You just lead on one kind of contract to run to like this potential high target of the day. So like all these kind of things, like it didn't make sense to me until like I started actually learning the technicals. I'm like, oh, this makes sense. Like, okay, now there's a rhyme or reason why Mark Douglas is saying these kind of things. Like, it's like there's a reason behind all of like the book is very well written, and like the psychological aspect definitely ties into like the mental aspect of it too. I mean the technical aspect of it of trading too. So yeah.
Yeah, no, that's a good point, especially.
It all starts with this like it all starts with like this mental, like all these rules starts with like up here before you even learn like any of that. So yeah.
Yeah, no, that's true. And like I said, definitely if you're in a trade and your heart's pumping too much and your blood pressure's too high, you're definitely over leveraged and you shouldn't be. When you're in a trade, you should be comfortable. You should be able to, be at a calm state, right? You should trust your analysis. You should have enough confluences that, okay, this is the reason I'm in this trade and this is why. And you should be able to know too, why you're in a trade, why you took it, and of course where those levels to get out at, and of course those levels to um, take your stop loss as well. But I'll say that another point is just you can't go broke taking profit. And that's the thing is you take those profits and it's like, okay, if I've made a 1 to 4, 1 to 5 today, you didn't take at least 1 to 1 off. It's like what was the risk for? You know what I'm saying? Like you have to put something to be cool. You know what I'm saying? Like whether you put yourself at break even and okay, cool, at least I won't lose anything, right? And I think that's the biggest thing is definitely take those wins. You're not gonna lose money taking profits. So I think that's the biggest point when it comes to consistency and finding that edge.
No, yeah, I agree 100%. Like these are pretty. I mean, and he made these in the. I think he might have released this book in like 2000. And it's like a lot of these psychological books that you read and trade. And it's like one thing I said when I first read this book, I was like, this is just good life advice. Like
Yeah.
outside of trading or anything, like, this is just like good life advice in general of how to get ahead, how to compose yourself, how to deal with adversity because like you're going to deal with that in the market too. But you a lot of things that carry over from trading end up helping you in a lot of other areas of life because like it does end up helping you confront kind of what you got going on and all your different type of weaknesses or things that you have. So
Yeah, yeah, very good point. Like to take checking your emotions, right? I think that's the biggest thing with trading.
Yeah, I see
Allows you to check your emotions before you do anything.
I've had some traders check in like a one girl, she does like a 10 or 9:15 a.m. mental check where she has like a timer on her phone that just goes off, and it's like it'll might she might be in a trade, she might not be in a trade, but either way she just takes a step away like and just takes a deep breath like to check like I've been in the market open at 8:30 central, like it's 9:15 now, it's been 45 minutes, how am I doing, like am I good, am I not, am I tweaking? So yeah.
no, because genuinely in that 45-minute period that from 8:30 to 9:45, so much can the thing about it, especially if you're trading like indexes and stuff, like there's that built-in volatility where like immediately when the market opens or within an hour or two, you're going to see that pump. Whether you're going to know pretty quickly within an hour or two which way it's going to go, and that can throw you, especially if you're not prepared. So this next one, so I don't think a lot of people actually don't know who this is. So like this is Charles D. Francesca, Charlie D in the 80s, he was one of the biggest traders at the CME in Chicago. Basically, he was responsible for all types of volume, tons and tons of contracts that he would trade every day in the millions of dollar range, pretty much. But he passed away, I want to say, from leukemia in 1991, so even before any of us were born. Um, but yeah, genuinely one of the best traders that most people have never heard of. But what I read his book or a biography that was written about him, and one thing that they said was Charlie sincerely believed that just about anybody could become an excellent trader. As far as he was concerned, there was no shame in taking a risk and losing, so long as you learn from the experience and came back strong. I believe that 100%. I think as long as you're a person of about average intelligence, you can be a good trader as long as you're willing to work on yourself and continue getting better over time. I think that's the biggest differentiator. It's like, are you willing to get better over time?
Yeah, no, that's a good point. Like I said, anybody can do it. It's it's the hardest way to make the easiest money. like I said, because it's a battle within you, and two, like I said, to forget everything that you were taught when it comes into trading, because it's a different game when it comes to that type of money and cycles and looking back at past data and things like that. But yeah, I do agree. The technical part of it, just the basic aspect of buying and selling, yeah, anybody could do it, right? But it's of course defining that edge, and until you look internally, and you're able to, like you said, check those emotions and see what's going on, and be able to um, really detail how you feel, just market sentiment overall, then that's when they'll struggle to have any successful trades. But I do think anybody can be a trader though.
Yeah, whatever internal demons you have, I suggest you go fix those before you start trading, man. Because any kind of ego insecurities or like trauma that you might have grown up with is gonna come right into the chart, and that personality is gonna show itself. Like all those things that we talked about in the beginning of like FOMO and not having patience, whatever it may be, like it's gonna come out and it's gonna be shown clearly as you trade. So like, yeah, I don't need to go too much into detail about it, but yeah.
Yeah, and I don't even think it's something that you need to necessarily figure out before you start trading. But the thing is, it will be exposed when you start trading, very quickly, like what all your insecurities are and what the different things are. So I actually had something that went right along with that. I'm gonna skip ahead a little bit. So yeah, this one. The market will make you either quit or fix all of your mental weaknesses. Um, this is one that I think is absolutely true because like, and I think it is the reason a lot of people quit because like they don't have a good relationship with loss. They don't have a good relationship with losing. So it really eats them alive from the inside out. And so like they end up quit trading. And I know for me, I look at trading as okay, they say 90% of people lose and 10% of people make all the money. They make a lot of money. That's way better odds than let's say I wanted to go to the NBA or something. That's like 0.01% of people or whatever. So it's like 10% odds. That's not that bad. Like if all you got to do is figure yourself out, that's it.
And that's the thing too, is how many people are starting, right? Like that's 10% of a lot of people started and get rid of it, right? So of course the numbers are even more inflated, right? So like
Mm.
you said, yeah, as long as you have that those internal battles and able to get over it, there's a lot of money to be made, and why not? There's other people that's like they're not able to pass basic algebra or do things like that, and they're able to make millions, right? And it's like so it has nothing to do with your intellect. It's more of just personal mental challenges, those barriers that you need to get over and define your edge.
Yeah, and I think another point you just hit on too is like you said, some people can't pass algebra. All three of us are engineers of some sort. Um, the only math that I use is addition, multiplication, division, and subtraction. Those are the only things that I use at this point. Maybe a little bit of Excel, which I still use those same things in. So it's like you don't have to know calculus. You really don't have to know algebra here. You just need to know how to quit. Maybe percentages, like percentages and basic statistics, maybe. Um, Fractions, yeah, fractions, percentages. If you can understand that, you can trade. Like you need about fourth to fifth grade level math to be an excellent trader. But quick math, that's the thing.
Very quick math.
Yeah, let's see. Well, I skipped a couple, so let's make sure we go. Um, the go. Okay, so this is another, and I really what I did with this presentation was just kind of pull some quotes from books that I had read over the years. This is one that I read too. He did a good job. I think I want to say he's a medical doctor, like a Russian guy. He wrote a book that on the first portion talked about psychology, and the second portion it really got into the nitty gritty of indicators and candles and all that. So I kind of like that two aspect. But one of the quotes that I really like from him, he said, "The goal of a successful trader is to make the best trades. Money is secondary." Basically meaning that if you stick to your system and a good trade for me is defined as a trade that falls within your system. If it falls within your system, whether you win or lose, then it was a good trade. So your goal is to make consistent good trades, and if you do that, the money will come. And it's something I've seen over time.
Yeah, like money is a byproduct of having a great system. Like I know that, for example, a few weeks ago, Iraq said that they were going to insert themselves in the Israel-Palestine conflict, and I was in a trade at the time, and it was a pretty good setup to me. It was one of my A+ setups, and I was going long, and suddenly the market just dumped. I'm like, why the market dump? Like, what's wrong? Like, so my stop loss got hit, but when I went and like, I'm like, is there some news? And I found out, oh, there's news happening right now. Like, okay, this news obviously affected the markets. Everybody was saying, like on CNBC, on Twitter, whatever it may be, everybody was saying this news obviously affected the markets. And so I'm like, okay, like the market kind of reacted irrationally, but I know that like my move was like it was a good move because literally the candle just wicked. You know those really quick moves in the indices, Chris. You might get wicked out in like 5 seconds, and then it goes back in the next direction. And that's exactly what happened. So I'm just like, okay, I know that this is a good trade, and like sometimes some things are out of your control, but I have my risk on there. So um, if there's an opportunity for me to re-enter again, which I did, and I made that back and then some on top of that because um, it was just a matter of like following the system more than like worrying about the money that I was gonna make as a byproduct of the system. So like some things are out of your control sometimes. We don't have any control of what's gonna happen. That's part of like just identifying back to those principles, like that anything can happen. So
Yeah, that's true. I mean, the some of my best trades weren't my biggest trades, and I think that's the biggest thing is sometimes you get setups that are like, okay, this is a clean setup, this follows all the plans, and like I said, money is secondary. So that's the biggest thing. The biggest trades I've had have been my easiest ones, but it haven't been like the like best setups or something like that. Sometimes it's just you enter on intuition, like, okay, well, if I know if I'm checking the market every day at the same exact time and I expect volume to come in at this time, you're able to use those and build it onto your system. But yeah, it's definitely not a trade is not based off how much money you make if it's good or bad, because you can have, like I said, good trades that you didn't make money, right? And it was a learning lesson, but it could be that building foundation to that next trade that's even bigger, right? So that's the hard part about trading is we're so used to tangible stuff that we can see, and I put in the work, so I should be able to see it and see the money. But with trading, a lot of the times for years you'll put in the work, but you won't see the money. The money won't come till later. And so yeah.
I think that's one of the differences between traditional work and um, trading. And trading is really like you're capitalizing on opportunity consistently. You're just consistently capitalizing on the opportunity that the charts present themselves. That you've analyzed the charts, but you have a 9 to 5, and obviously people are doing work, but you can suck at your 9 to 5. You're still going to get paid. Like at the end of the day, like you can just kind of show up to work and meander around a little bit. That eventually you may get kicked out for that, but for the most part, there's people who just like they go to work and they get paid regardless. They don't have to excel, but they don't have to be kind of crap either. In trading, that is not the case at all. You have to be on point. You have to be on point every day, and you have to be on point consistently, or else you're not gonna make money. The market owes you absolutely nothing, and you have to be able to tame yourself so that you can be consistent enough to make these plays consistent.
Good point. Yeah.
So, let's see what the next one is. This is Tom Hogard. He's another guy that I like. He released a book, I want to say in 2022, called The Best Loser Wins. It really kind of highlights people's mentality around losing. But I really do like this quote that he put out maybe a month or two ago. So he said, "Who are we? We are traders. Who are we not? We are not fortune tellers. We don't know the future. We're not wise men. We can see the future. We are emotionally resilient. We work hard. We make our dreams come true. We do not rely on luck, although at times we may get lucky. We observe and deduce. We act with confidence and decisiveness when an opportunity arises. We are observers of behavior. We accept that while history never repeats exactly, it rhymes often enough for us to profit from it. We never give up. We never lose faith in our ability to make money. Our greatest enemy is our ego and our impatience. Our enemy is our desire to always be right. We accept and embrace the fact that we can be right 50% of the time and still make money. We prepare ourselves mentally so that we can act in our own best interest in the heat of battle. We never stop growing and we never stop learning. Your job is not to know what will happen, but to know what I can't remember. It got cut off there, but you get the point pretty much. I think he did a really good job of summing up what it means to be a trader. And that's really what it is. We're not fortune tellers. I don't know the future, but I can look at the market every day and kind of see what the tilt is. Like there's a tilt towards there might be a tilt towards buy one day, and there might be a tilt towards sell one day. And some days there might be not be a tilt towards either way. It's like, you know what, I'm good. I'm just gonna go ahead and stay out. So
Yeah, and that's the gray area, the getting caught in those ranges, and it's like that's what can make or break a trader. Where it's like if you don't realize that it's just not a trading time right now, where okay, whether we're getting close to a big news event or something like that, where it's like okay, we're just going to be idle for a couple days until that comes in. You definitely have to be aware of that, and like I said, sit on your hands for a while. But I wanted to ask too is what do you think is more important in a good trader? Do you think it's patience or do you think it's the discipline?
It's like a double-edged sword. I think they're kind of one and the same, and it's so much like similar, like they both intertwine. But for me, I would probably say discipline. That's what I would say. Discipline trumps the patience, but it's kind of hard to put one over the other. But I know for me personally, being disciplined and sticking to my trading plan is what is going to, like, I can sit at a chart all day and be patient and not enter. I can also look at a range bound day, like you said, and know not to trade. I have like, but and to me, that's also like sort of discipline. Um, but like sometimes you can get it like it's like sometimes discipline is there when patience is not, like, like sometimes the two don't overcross sometimes, and that's when I like will break um my rules, or I have that little demon on my shoulder telling me to do something, like just go do it, like go on the minis instead of the micro contracts or something like that, and I'll go ahead and do something like that's like that's an example of like discipline and patience not being the same thing. Is like maybe it's a good trade and it is the right time to enter, but I'm gonna go ahead and not be disciplined and over leverage and enter like larger than I should. So I think for me it's discipline. It might change for every person. So yeah.
yeah, I would say the same. I think it would be discipline because I think discipline breeds patience. Because I think you are by definition patient if you are disciplined, because like you're disciplined to whatever system that you're following, and everyone has a slightly different system. No three of us, like none of the people on this call, like trade the exact same, but that doesn't mean like we can all make money, right? So I think like I kind of use like almost the analogy like of a dog. Like if you have a disciplined dog, that dog is patient and he's gonna wait on whatever your command is. Like he's not gonna, like a hunting dog, maybe not just any dog, but like a hunting dog, like he's real patient. His eyes locked on the target until like it's the time to strike or whatever. So I would say discipline too overall.
Yeah, yeah. No, I agree. That's a good point too. It's just looking back at like the common traits that successful traders have, and that seems to be the biggest thing. And I feel like I do agree that discipline is probably the most important, just because that flows into other aspects in the life, and that helps. Um, Whether it's secondary of help with your mental load or emotional load or things like that, I think discipline can help help that trader.
Mm.
Also, this is one of my favorite books. This one, The Psychology of Money and Trading in the Zone, are like one of the first three that I read when it comes to like trading. So yeah, this is one of my favorite ones. Best loser ones.
Yeah, he's really good, and I mean, like he's still is, like putting stuff out to this day. I think he has a really firm grasp on like what it means to be a trader, and he's able to articulate that, because like it is a hard thing to articulate, because like it is kind of abstract in the way it's like, how do you have to think to be a trader? Because it is not the conventional way of thinking. Because again, you're looking for opportunities, you're looking for uncertain expectations. And I think when most people think of investing, they think, okay, well, the stock market, I'm going to get 15% a year, or I'm going to get real estate. Real estate can't collapse. Like it's going to keep going up. But we saw that wasn't the case in 2008 and whatnot. Like nothing can go wrong. Everyone is a trader in some point. Like if you're buying real estate, you are a trader. You are trading in the real estate market. You are trading your dollars for hard assets, real estate. Um, and yeah, that psychology, like I said, most people want to guarantee. So like they are not truly accepting of whatever risk that is on the table. They just go with the closest thing that people have said, like this is guaranteed. It's same reason, like I think with Bitcoin, a lot of people, the data is there, but like it's Bitcoin, it does, and crypto does have that risk associated with it. So I mean, I don't know.
Yeah, and that's anything new, right? It's we're scared of new. We're used to the system, and I think that's the biggest thing with traders is once you realize like the system that everything is built on, or how life is, it's like okay, once you kind of realize what backs up that, and some of those pillars are not the most stable, and we don't have some of the smartest in legislation or government or things like that, and that's when you start to realize like okay, there are other factors in play that comes into these markets. So yeah.
Yeah, so this is actually I know some of us have had different. We talked about a little bit of mentorship earlier. So this is actually my mentor, Al Pickett. He's the founder of the Black Print. He's been doing it for at least 10 years at this point. Trading for longer, but founding the Black Print within the last 10, 11 years or so. Has a ton of traders that he's taught to navigate the markets. And one thing I do appreciate about him is like he started off with the psychological aspect. Like he really kind of hammered in like that psychological early because like some people are focused on so focused on wins. He's much more focused on the process and like how you get from point A to point B and how you consistently do that. But he and Eric Matthews, who was also part of the Black Print, they co-authored a book, I guess last year, called "You Are the Edge," and it's not super long, but about 91 pages, but it is jam packed with like the psychological way that like you need to be prepped and trained as a trader. But one thing that stuck out to me where early on in the book he talked about like, the three core transformations that you can have. So the first one was a change of condition. So that could be physical or mental. Like, you may end up being sick or you may go through a period where something traumatic has happened to you. So you're kind of off your game mentally. The second one is a change of circumstance. So it's a change of resources available to you. So you may have lost your job or you may get a windfall from whatever. You may win the lottery. So it's a change of circumstance or some type of resource has become available to you that was not previously. The third one being a change of being. So that is a fundamental change internally about what you believe about yourself, your identity, and even changes in your overall purpose. So like when stuff like that happens for whatever reason, like it really does shift who you are as a person and what's important to you. And that's the one that you're looking for. Um, and so with that, he kind of talks about like the change of being is what takes you on that hero's journey, like the from point A to get through all the trials and tribulations and turmoil to get back to your starting point. I'll talk about it in the next one. So it's kind of like what that looks like. So this is like the hero's journey, the overall diagram of it. It's like the most the story that every story is pretty much telling one way or another. So you're starting wherever you're at. You get some type of call to adventure. You may meet a mentor along the way, and you're still in this normal world, like you're the world that you know. And then eventually, like when we start trading for this example, like you cross that threshold into something that's new because it is absolutely unconventional. You have your trials, your failures. You may get some additional help along the way. You grow in your skills, and at some point, you may even hit a low point. I know I've hit several low points trading where it's like I absolutely don't know what's going to happen. This and the third. But eventually something does happen. You get this, and all five, the three of us have been trading for about 5 years at this point. So we've had several revelations, not just about ourselves, but about the markets and whatnot. And then you finally this is where you start to see change. It's like you've had this internal battle and you come up with some type of conclusion. Your atonement, you kind of forgive yourself for all the mistakes that you made in the past. And it's like, hey, we're here in the moment. We're continuing to trade. Your gift, the gift ends up being maybe this new consciousness or this new superpower that you end up having that allows you to trade better. And then you come back into the normal world as a changed person, so on and so forth. And that cycle just keeps on going over and over as you get better and better and like you learn different things. But I thought that was very interesting because as we've alluded to several times in this conversation is that you have to have like that mental change that precedes the actual change in your bank account or the change in your wallet size and stuff like that. So any
Yeah.
thoughts?
Yeah, I would say that's the biggest thing is the mental aspect of, like you said, once you have that switch of your thoughts of more positive thoughts, of more understanding of, okay, well, why did this happen, instead of like, oh, woe is me, or falling into that. Sometimes we do that as traders, like, well, this is what happened because of the news or because of this. And it's like, well, I just was unprepared for this day, right? And so it's just taking it as a learning opportunity. And you can't take those L, like you can't get the M's without taking those L's. And as corny as it sounds, it's like you have to have those lessons. Like that's just how it is. Like even everybody that's successful, right? And no matter what the industry is, and I think that's the biggest thing that I'm starting to learn is everybody's going to have their story, right? And everybody's going to have those hardships. It's not going to be just an easy plight to get wherever they were, right? Especially if they're successful. So it's going to be harder. You're going to have to understand the process, and really fall in love with the process, and be like, okay. And I kind of look at it like my cup is half full, and taking it as like just being grateful. Like I remember when I started and I was praying for $10,000 days or $1,000 days, or you know what I'm saying? So you have to look back, and as we continue to evolve as traders or as people, we continue to want to move the goalposts. But it's like, okay, if you look back and it's like, okay, well, if we've already went 100 yards at this point, you know what I'm saying? So it's like you have to take a little bit of the progress and really accept it, and take a step back to be grateful for it. If not, then you'll lose respect for the time. You'll lose respect for the money, and that's when you start over leveraging. That's when you start getting too cocky. Is when you lose that respect. So I'll say that's the biggest thing.
I think he hit it on the head. Yeah, both of you guys hit it on the head. Yeah. So
It's definitely not an easy journey.
This is something that I got introduced to through a book. It was called like Levels of Energy. We talk a lot about emotions and whatnot. And this book really dealt with emotions from like those really low negative emotions all the way up to like, the blissful emotions that and euphoric emotions that people feel. Really good book in my opinion. Like they really broke it down emotion by emotion. But you kind of look at some of these on the left hand side and like, think about it from a trading perspective. It's like, okay, am I going to do a good job if I'm trading number one out of survival? So you see, it kind of like breaks it down to the different paradigms that you can have. But like, if I'm trading out of survival, then I might be trading out of shame. I might be guilty when I'm trading. I might be sluggish and apathetic. I may be trading from a state of grief. We all know that fearful trading is going to lead to bad results. You may be trading out of a state of desire, and each one of these emotions is a little bit higher than the previous one. Um, but you may be trading out of a place of desire. It's like, oh, I have to make $1 million, or I have to do this, and that's going to mess you up. I'm angry. I'm revenge trading. It's like, oh no, I should be right in this, and so on and so forth. I'm trading out of a place of pride too. Very similar. It's like I have to be right. I'm the one. I'm the one who knows. But then you kind of hit that threshold. It's like you move into a place of reason. So it's like, okay, well, trading courageously, that sounds pretty good. Being able to trade from a neutral stance and not, being affected one way or another. Having the willingness to do what it takes to trade and be that top trader. Acceptance of what is and what may have happened in the past. Like you may have been a loser in the past, but you accept yourself for the wins and losses that you've had. You move up into a place of reason. It's like, okay, well, now I can see the field clearly. And eventually, like, you kind of get up here. They talk about enlightenment. I don't really get too much caught up into that, but it is like you get to that place of I'm trading from a state of peace. Like I'm trading from a state of joy, and like eventually, like this oneness where I'm in the zone. I would call enlightenment being in that zone pretty much. Where it is with trading, to where you're not even thinking at that point. You're acting, and you're acting out that trading plan. So I thought this was a pretty good one again because at one point or another you're gonna have to understand your emotions as a trader and why you do the things that you do. So
Yeah,
yeah,
I've never seen this chart. It's a good chart. But I do agree with that. I do agree that you have to take that recon of how you're feeling emotionally, and that's gonna play effect into those trades. And you shouldn't be using your average size if you're not mentally all the way there. If you're kind of out of it, it's not worth it. So yeah, that's a good chart though. I like it.
Yeah, I took note of the book actually. So I can go and like take a look at it later. So
You know, it was just something that I know this helped me a lot this year. Like I think starting in January, I really started looking at this more and more, but has definitely taken me um, to better places. But yeah, I mean that's pretty much all I had from a structured basis. But I mean, just like overall, I guess like what are some of the big lessons that y'all have learned, maybe about the markets or about yourself, or just things that have made you a better trader.
I would say for me the biggest is definitely understanding just the internal battles. Um, and kind of where you're at, right? Whether that's emotionally, physically, um, really understanding that, and then also too what season you're in. So I think a biggest thing is like for me, like even to tell you the truth, initially I wasn't even big on crypto a couple of years ago, just coming from the forex world. And once life changes and kind of seeing what's going on is the reason, like you kind of go with the wind and see what's going on. Um, and I would say the biggest thing for me now is just like, okay, where are we? How does the trading fit into my life? And I think that's the best thing that I've learned is letting trading work around kind of my life and not the other way around. Like I still do, still focus on what's the most important, and not get, losing track of that. Like you said, whether you're sitting on a chart for 12 hours a day and that just defeats the whole purpose. Um, so definitely taking that into effect. And I would say the other thing is probably patient. So as I was on my trading journey, I went probably 1 year, almost a year without taking a trade. It was probably like year two, and I just kept losing trades, and I would have big trades. So at this point, I was doing like funded challenges. So I'd have big trades, and I would lose it, and I'd be like, I don't see why I lost it though. It was just over trading, just simple stuff like, if we're in a bullish market, why am I trying to go bearish because it was a minor pullback, And it's just understanding like it just wasn't a good probability, so I shouldn't have taken a trade. Um, but really just sitting on my hands. And once I was able to sit on my hands for a while, whether it's a month or I would say at least a month, right? Where you just don't take a trade for a month. And the easiest time to do that is like around the holidays, like especially if you're into like stocks and things like that. Once we get around November, December, going into that new year, people are usually selling off to try to get those gains and stuff going into that new year, and they have to usually wait 30 days. So that's why we're trying to sell it a little bit early. So really understanding those cycles. But once I was able to sit on my hands for a while, that's what helped me get to that next stage as a trader, because my patience was able to grow and I didn't feel like I needed to trade, like, and that's why having like other incomes or other jobs or hobbies to support that really helps. And once you don't have that pressure, if you're just trading or initially you're working a 9 to 5 and you're trading on the side and you want to quit the 9 to 5, it's like majority of the time you're going to be under stress, you're going to be more stressed out, more anxiety, you're going to overtrade because you need the money now. And so once I realized to like kind of don't take it so serious, right? Whether it's trading or golf or whatever, it's like you have to have a little bit of the natural part come into it. And I think that's where trading comes into it, is like we focus so much on the technical part, and it's like it's you versus you, and you have to want to get better every day, or um time after time you're gonna, as those seasons and as those months go by, you're gonna be out the loop when it comes to those money cycles, because every 4 years is different and it's constantly changing, it's getting better. It's not going to be the same. It's not going to be the same cut and dry ABC every 4 years. That's not how it works. And so if you're able to adapt, I think that's another thing, is you go into the market some days, you're like, okay, I'm very, very bullish, but that's not everything is showing that it's signs of bears though. We're bears on daily, we're bears on weekly. And so once you're able to take a step back and not get so caught up in sometimes your bias, that's what will help. But I think the adaptability plays a big part into that.
yeah, for me, it was the biggest thing was just learning to unlearn. I know we talked about this a little bit already, was that with trading, you're unlearning so many different things that you were taught growing up and that society teaches you, or that you just experience in life. And so um that was the first step for me when it came to like making sure I had the right mental. um because I'm definitely like Chris knows me, I'm a person that's like, I'm gonna, how bad do you want it? I'm gonna work super hard and I'm gonna go all in and do this and that. But sometimes when you're trading and if you're going all in and if you're working super hard, like how bad do you want it can end up wrecking you really bad because you're forcing things and you're trying to forced trades where you're trying to learn stuff too fast, and you might get misinformation from some people. So for me, I just learned like steady wins the race is what the mantra that I've start trying to adopt now moving forward, is that like the slower I go, slow motion is better than no motion. And just being able to like learn that like I'm not gonna always be able to go at 100 miles an hour. Things are not gonna always come to me at like the speed of rate. As if I work hard on something else, I'm not gonna see those gains immediately. So it's just like that was my first like rule of like discipline, is like just knowing that like this is a different game that you're playing, and understanding that like there's delayed gratification. And I kind of had to like think back to like the time that I was like when was the most like that I really practiced delayed gratification. And I was talking to some friends about it, and I was like, man, in college, like we had it good, like we were really disciplined. We know that we had some long term North Star for you to go to school, for 4 or 5 years, and you say like, hey, I'm doing this for like XYZ, I'm doing this for a job. Like I was trying to get, into tech. I knew that I wanted to get into tech, and it took me multiple years, from the age of me being like 19 years old in college, 20 years old in college. That's the kind of delayed gratification that I was like, let me implement that now into my trading as well. And back then I probably didn't see it as that, because I probably just saw it as like, you do this, like, and it's just gonna like, I don't know. I just probably saw it as like it was normal to me. Everybody, like I just saw like a kind of a blueprint for it. And so now I'm like, okay, everybody's blueprint for trading is different, but I know for me this can work because I've seen it work for other people. So it's just going back to that delayed gratification aspect of it. And maybe delayed gratification probably works for all traders, because some people aren't going to show you the years that they lost. Some people aren't going to show you the 7, 8, 9, 10 years that they were like in the red, and then maybe like their 10th year of not giving up, they might have just had a successful like trading year. I know somebody told me the other day, he was like, yeah, like he made all of his wins back from this past year alone, just like, and he's been trading for like 7 years now. So for me, it's like, yeah, it's just that delayed gratification, and knowing that like I have all the tools that I need to be successful. And it's just like now execution and sticking to my plan is what's gonna, put me forward. So
Yeah, no, I would agree with that 100%. Especially on the aspect of, you kind of mentioned that, like, oh well, college might have, we may have had a North Star in college, but things like high school, well defined. Things like college, your path is well defined. You're set up with a counselor. You know exactly what's going to go. There are no rules in trading. There's no rules. Everyone can do it differently, and everyone can make money. Most people won't. But the thing that trips a lot of people up about trading is there is no one right way to do it. There are essentially infinite opportunities. Like you can go down and trade on the 1 second chart if you want to. Like Wall Street has robots that are trading this a million times a second type of stuff. Um, it does mess a lot of people up. It messes people up because, again, like you have to, when there are no rules and you are responsible for making your own rules, it also means that you are accountable to holding to your own rules. Because you can, and you can kind of copy someone's system too and make it your own, but it's like, regardless of how you tweak it, you have to be the one who's like holding yourself accountable and holding yourself to the rules that you set out. You set your own leash pretty much.
Yeah, and that's true. And I think for the first time, like you mentioned, whether you're in high school or whether you're in college, like, okay, I have a plan. I know this is my degree, this is my concentration. I take these XYZ classes, and that's how I get there. But when it's in trading, it's not that at all. There's no, like I said, there's no one size fits all when it comes to trading because everybody's different. Everybody comes in with their own different baggage. So that's definitely a good point. And like you said, respecting the timeline. So. I was kind of the same way. Like before I got into IT, I was actually pre-med. So I was thinking like, okay, you do 4 years undergrad, you do 4 years medical school, you do 2 to 3 years in your residency, then 2 to 3 years in your specialty. So in my head, I'm like, okay, I got 10 to 12 years before I'm able to become a doctor. And it just takes that long, right? And so I took that same mindset when it come to trading. I was like, I don't care how long it takes to get to that point, right? It's like, okay, I already had my job, I already did the regular route. So I'm like, okay, I have that. I'm comfortable over here. Now let me focus and be able to put no timer on, like you said, the unlimited possibilities of the money that you can make, right? Like you can really make, professional athlete type money from your house in your pajamas. And I realized that, and I'm like, I don't care if it takes me 10 years or 5 years. Like there's no timeline to that because I got nothing but time at this point. You know what I'm saying? And I
Yeah.
think that's the biggest thing is we're so used to now with social media with the quick comparisons. And I mean, yeah, there are a couple traders that, may catch it in 1 or 2 years and that's
Yeah,
just what
yeah,
happens. Right.
yeah.
And it's like, but the possibility of that happen with one not selling any mentorships, like we're just talking just strictly trading. There's only a few people that do that, right? And
Yeah.
that's just how it is, right? And it's just like the NBA. Like back in the day, there were a couple people that went straight from high school that can go straight to the NBA. There's not many people doing it, right? And so I kind of looked at it like that. Like some people just, if NBA is the end goal, sometimes you have to go to college first, or you have to go to D2 first before you get to that stage. It just takes time, and you have to respect it. And I would say the other couple points I would say that are important are one, the chart time. So you won't make money unless you put that chart time in. That's going to be very, very important for any trader, that chart time. Um, and for all different seasons, because you'll never know how December trades if you never trade in December, right? And it's going to be different for every year. But then the other two things would be a trading plan. So you have to have a trading plan because that's what you're able to tweak to see where you went wrong, right? And that's how you really define that plan or any other techniques that some mentor might tell you. Like I said, everybody's going to trade different. Even if you all learn from the same person, everything's going to be different in that aspect. And the other part is, what is your purpose? So when it comes to trading, if you don't have a purpose in it, you're going to get lost. And whether that's like, okay, I want to spend time with family, or I just want to have extra time to go spend on this hobby or do this, you have to remember that. So those days that you are up and then the market gives you $600 and you're like, oh, I wanted 5,000 today. It's like, well, that's not what the market was giving, right? So you have to kind of remember like what's the most important, and you don't want to get caught like like letting your life slip away because you're just staring at the chart the whole time, like that defeats the whole purpose of being free and being able to do what you want to do with your life and trading. So,
Yeah, I think there's like it's definitely something to be said that our society we praise so much things that are fast and instant. Like you see this the LeBron James, the Kobe Bryants, we praise them. Um, Nobody is like necessarily gonna praise the one that went to JUCO route or like the person that took the long like I know like in music, like we look at these child celebrities like, oh, like Chris Brown and Justin Bieber were like these childhood stars and they made it, they've been famous for like 20 years now. We've seen them grow. Well, nobody talks about like the Victoria Monets or the Sirs, like the people that were like in Hollywood for 10 plus years, writing for other people, doing their background dancing, producing for them, whatever it may be. And then it's like, okay, now we know them, but we don't give them their flowers. Like, dang, you just won your first Grammy and you're like, and you're 30 something years, 34, 33 years old. Like you won your first Grammy, you had your most successful year ever. And we're not giving that enough credit. So like I think that's definitely a point, like what you said. Some people might make it in year one, and others might just take the time to like uh make it later. So it's just a matter of that persistence and not giving up. I think something that's also big when it comes to like you said the charts is like back testing, like being able to go there and like see like what is your edge in your system, like having the discipline to go back and like sit there and take the time, the hours to like actually perfect your, not perfect, let me not say perfect, but like hone your craft so that when you do come to the charts, it's like you like that helps a lot with your mental, to be honest. Like that it allows you to have the confidence and like releases all that anxiety. If you say like, hey, if this is like a 70% chance that like when this type of when this formation comes, or like when like we hit this level, like it generally like will have the possibility of going in this direction. Like you have something to actually back up um all of your strategy going forward. So like yeah, it's definitely just taking the time to hone your craft, like no matter how it's going to take. So I like that you said that.
Yeah, it's one of those things where it really is. Trading is an extreme sport, and I treat traders like mental athletes. Really, like you have to um, be so locked in a way, shape, or form, and it ends up making you a better person overall, one way or another. Because again, you have to tackle your own weakness. Um, it comes along with like a lot of not being afraid of the being outcome independent, like they call it. It's like yeah, I'm not worried about what the outcome is. I'm taking the setup. And I remember in the Tom Hogarth's book, the Best Loser Wins, he talked about Kobe quite a bit. And he talked about Kobe in the way that he's one of the top scorers of all times. But also, if you look at the list, he missed some of the most shots out of any player too. So like literally just taking those shots, and obviously in trading, it's not the same analogy exactly because like over trading does not necessarily help you, but taking those shots when you see them, and being able to actually pull the trigger without even if you miss the last one, not pulling that fear into the next shot and not pulling that fear into the next shot if you make it and being like independent pretty much of what that outcome is.
That's true. Very good point.
Yeah. So yeah, it's that's pretty solid, but I think overall we touched on quite a bit. Like we touched on a good chunk of the psychological aspects. Of course, you can't really hit everything, but I think if you take this and run with it, that should set you up pretty well on your trading journey. It'll at least put you on the right foot to overall have realistic expectations, not only of yourself where you're at, but where you could go to. And oh, the other thing I was going to say. So with kind of understanding where you're at in the market, it takes time simply because there are realistically market cycles that happen. So us being 5 years in, we've seen a peak, we've seen the bottom of a market, we've seen bear markets, and probably about to go into a bull market pretty soon here. So we saw 2020 and 2021. So understanding, I think part of it is not just seeing it because we can all look at the charts, but being there to actually feel what that feels like when the market is just absolutely ripping and everyone's excited. And then seeing next when the market just tanks and everyone loses hope and it stays there for a year, it doesn't really move. It's like that, seeing that and feeling that are two different things, and being able to do both, I think that really does make you a better trader. So generally, I would say it takes realistically about on average 3 to 5 years for someone to really get it and for them to lock it in. Like Nosa was saying, it could happen sooner. There's some people who just knock it out the park from day one, and that may be for a factor of reasons. Maybe they were taught growing up, or they just have that wiring that works for trading, because that is a thing. You have that internal wiring that already works. But yeah, it's one of those things. Like if you're going into a bull market, which I think we are, it's kind of trading on the bunny slopes. I think it is the best time to get into trading. You can develop bad habits thinking that this is how it always will be, but I think if you're getting in there, it kind of helps to build that confidence. And then you follow a group or a mentor who understands like what is actually going on and where they're at in the market and what type of setups they should be looking for. So yeah, like all those things will definitely help you to be a better trader.
Yeah. No, good points. Like you said, it's every year is different. Until you're around to get that experience, I mean, you have to sit there on those start times, and that's why I think for me in the beginning, I was so keen on having a schedule of Monday through Friday, I'm going to look at this same pair every day, the same exact time, so I kind of know how it reacts. And so you're able to hone in on those training plans and what you look for because you've done it so long. And like you said, it will bring in that confidence of a while, unless you are over leveraged. For the most part, if you're in a trade, you should be calm because you've seen it for a while. You've done this. It's kind of second nature. So yeah, that's a very, very important point going into trading. And another part of it is there's always a learning curve. And at this point, unless you have a mentor, the first bull cycle, you're going to miss it and you're going to be taught a lot of lessons and miss out on a lot of money. And that's just kind of the, realistic aspect of it is when we first got in those first couple of years that, like I said, the first bull run that you see, you're probably going to miss out or make a bunch of simple mistakes that an experienced mentor or trader can help really define those skills or, give you warning. Like you said, going into the new year, hey, things are selling off or where we are in money cycles, like all those things play a part. So you can't ignore them or it's gonna cost later on, whether it's your mental or it's your money or your account later on. At some point, you're gonna pay for it. So
Yeah, 100%.
Yeah, I think another like a good book that I read after like missing the 2020 bull cycle was because like I think we all started trading like 2019. I know for me it was like December 2019, so I missed the 2020, like all that run up we had. And I started reading like the stock traders almanac. It says the stock trader, but honestly, a lot of the like what Travis is talking about as far as like the times of year that things are going to fluctuate, go up and down, the trading seasonalities. A lot of that is covered in the book. And to me, it's just like my mentor told me, like, hey, read this book, because aside from it just talking about stocks, it more so tells you like what are people's habits at this time of year, what are institutions going to do. We might dollar cost average, we might take off some, we might also like sell off some stock at the end of the year to like for tax savings. We might, take some of our losers off. We might take some of our profits. We might do this and that. The election cycle, it talks about that. It talks about the opening range of the year, beginning of the year, like, all of the like massive gains you might see from the January to May months or whatever it may be. Then talks about the summer months where it might be a little more choppy depending on what year it is or what part of the cycle you're in. So it talks about all these different things that honestly to me it relates to more than just stocks. It relates to just, I think, the financial system and traditionally how the financial system moves in the past. And so like that's a part of like learning the game as a trader. And the book to me is like it comes out every year. To me, something that it tells you is that hey, this is different every time. It's not necessarily to say that hey, this is gonna happen for sure, but this is just something to tell you like hey, if we can give you probability and statistics behind it, like this is going to be like give you a higher increased chance to be aware of how you might approach the market. And so to me I think like just it's all a part of the learning game. And sometimes I wish that I would have learned something earlier. I might have gotten earlier, like I wish I would have traded earlier, but everything happens for a reason, and everything has its timing. So um yeah.
Yeah, I think overall, and something that we didn't really touch on is I think trading, if I had to define it, it is the art of valuation and the art of decision making. So it's like you're trying to evaluate, you're trying to figure out what's the real value of this thing versus where it's at. Like Bitcoin, we know the value of that is pretty much infinite. It's almost priceless, but it's valued right now at about $65,000, $70,000. So I mean, our whole goal is to. I think Warren Buffett said it's like you're trying to buy a penny for. I mean, you're trying to buy a dollar for 90 cents or something like that. So it's that science of decision making to figure out, hey, what is the value of this thing? What's the real value of this thing? That's what you're really trying to get after. And the decision making aspect comes up because you just named all these things that come throughout the almanac. So it's like every day there might be a different news event, or every day there might be something else that comes up, and that does affect my decision making. Do I even want to trade today? Like I may see a setup, but it's like, okay, well, I know there's a major news event happening right now, so it's like I'm just going to go ahead and sit out because this new piece of data has come in, or something, some type of volatile action happens because somebody said something in the news, or somebody kicked somebody's dog. Who knows? But like, yeah,
Yeah, it
And
could
that's
be
why like and that's why
anything.
like having a system is like from like what I learned was that having a system, because like you said, trading is decision making. Have the more decisions you have to make, the less likely you are to lose, to fail. Having a system allows you to eliminate like having an influx of decisions where you're just
mm-hmm.
overwhelmed with like so much of like what's going on.
Yep.
So your system at a baseline should eliminate half of just like the structural basics of like when I see this, then I'm gonna have the opportunity to enter a trade. And then you can determine based off of like what's going on today and the news, what's going on seasonality,
Yeah.
like you can focus on that stuff, like but your system just gives you the first of like yes or no, I should not enter based off of like other factors that are just like the square one. But if you're trying to make 1,000 decisions all at once, like it's not like it's likely that you're gonna just we're human, we're not computers. We're not, our brains are not going to process that much information that quickly. So
No.
um
No, that's a good point. I look at it like I don't know who was in the interview that said it, but they try to only do like 2 to 3 big decisions a day, right? And then after that, it's like you just kind of lose the just the quality over quantity type of thing, right? And that's kind of where I'm at, where it's trades, like, okay, I'm only taking 2 to 3 trades. After that, I'm over trading. Or just things to do in the day. I mean, after that, you're just how long can you go working 10 to 15 or doing 10 to 15 things every day and wearing yourself out? You're not going to go for 40 to 50 years. And that's kind of the thing is it's the long game. Like who's going to be here tomorrow, right? Because tomorrow could be that big trade. You never know. And so that's the biggest thing is just steady adding to your A coins every day and you know, keeping that process defined.
Yeah. No, 100%. I'm a firm believer in simplifying life as much as possible. Like there's some things that I know I'm gonna do every day. I don't need to make a decision about that. Like we're just gonna keep it pushing. Because decision fatigue, I think they talk about that. That is a real
Real.
thing. Decision fatigue. Like I don't like if I have to deciding what you're gonna eat every day and deciding like what you're gonna wear every day. Like I think I used to work in the chemical plants. And one of the easiest things was like I would just throw on some basketball shorts, and we had like the overall protective gear that I would kind of wear every day. And that was so cool because like you wake up every day, oh dang, what am I gonna wear? Then I switch to this job. It's like I gotta figure out what type of polo and jeans I'm gonna wear and whatnot. And it's not a big thing, but those things do add up over time.
Yeah, and it affects your other part of life, right? And I think that's the thing is we don't think about it like, okay, if I'm making all these decisions, it doesn't seem that much, but it's like the mental toll or the toll that's taken on your body or just whatever. It's like you're not like you're not going to be in that fighting shape, and that's the thing. Like if we treat it like athletes, you need to be in the fighting shape. You need to be on your P's and Q's because it's money related. Like so. Yeah.
Yep. Sharp
Yeah.
responsible. Yeah.
I think that's we've been going for about an hour and a half, so I think that's pretty good. Go ahead and wrap up here. Definitely got some good stuff that we'll end up clipping. So yeah, this will end up in the course. Overall, I mean, you've had myself and Big Trav, Nosa. This has been, all of us part of Pulse on Crypto in one way or another. We each look at different stuff. I know Mike's big on memes, Nosa is big on futures and whatnot. I kind of split my time between both. I think both excellent ways to make money, especially as we go into this bull run. But any closing thoughts from y'all?
No, I would just say the biggest thing is definitely respect the process and don't get too caught up on day to day. That 1% better every day over time, it definitely adds up. But yeah, just don't get too caught up on having everything right now. It just takes time, and it makes it a lot worth it. When you have that delayed gratification. So
Yep.
it's worth it in the end.
Yeah. All right, y'all. Well, this has been Pulse on Crypto. We will catch y'all later. We will see you on the moon. Take care. Bye bye.
Yeah.